Everyone, Maureen Sweeney here, and if you've been watching consistently, I probably am bumming you out over all these additional fees and costs and, credit and all this extra minutia. Why can't you just buy the dang house? Well, because we need to talk about all the fees and everything that is going to be expected of you, in your when you get pre-qualified, so you know about your credit. So this way there are no surprises, because again, I hate surprises, and I don't think a lot of you guys want surprises either, especially when it comes to your housing needs and your financial future. Okay, unless of course you win the lotto, and next thing you know, you're like, oh my God, I'm a lotto winner. And then everyone's like, hey, lotto winner, give me money. And you're like, leave me alone. So, but many of us are not lotto winners. And for those of you out there who are, shout out, word, you guys are cool. So when you buy a house, the mortgage company is going to, give you a mortgage, fingers crossed, and then that the mortgage is going to be broken down. Every month you're going to pay principal and interest, and then you'll hear the term P&I. That's what that means, principal and interest. Okay, the principal is the amount of your mortgage amount, like the nut that you borrowed. Interest is what the bank is charging you to lend you that money, okay? And so because the bank is going to charge you money to borrow money. Just keep that in mind. So then you're also going to pay some additional fees, okay? So forgive me for kind of reading these out, but I don't want to misinform you. Okay, you're going to need to pay closing costs. Those are fees paid at the closing of a real estate transaction when the title of the property is transferred from the seller to the buyer. Okay, so there are fees in that. Closing costs may be incurred by either the buyer or the seller. Okay, so either of them may pay. And many buyers, sometimes, you can roll those into your mortgage, but then again, your mortgage amount will be even greater. So keep that in mind. So then here's additional fees that you may be paying. You'll be paying for the appraisal. Now keep in mind, the appraisal is the property of the bank. Even though you're paying for it, the bank is the client, and so the appraisal is theirs. Why? Because they want to make sure that there's value in the property that they are purchasing. You've already established the price, but is the value there? Okay, we'll talk about appraisals later on. Credit report, closing fees or escrow fees. These are fees for overseeing the closing. Okay, so it's typically $2 per $1,000 of the purchase price plus $250. I don't know why that fee, but that's typically what it is. Title search. What's a title search? That ensures that nobody else has claim to the property. Okay, you don't want like 10 years down the road to have somebody show up at your front door saying, this is my house because I got the deed. And you're like, no, it's not. It's my house because we did a title search and you don't have it anymore. Okay, so that's going to be your, what you're going to tell them later on. Survey fees, flood zone search, lender's policy title insurance, the owner's policy title insurance, natural hazard disclosure report. That's not necessarily in all states. I think that's like a California thing, but keep that in mind. You may have to pay that. Homeowner's insurance, it's paid up front, okay? Because they want to make sure that you are insured, that your house is insured. You're going to have attorney's fees. So that, you're going to have, if you're the buyer, you're going to have them. The lender may or may not require a lender fee also, or attorney's fees also. Escrow. So they want to make sure that you are deposited for your property taxes, typically for 2 months. They want it also for your mortgage insurance. So if you have PMI, they're going to escrow that amount also. Any transfer taxes, okay? That's the tax when title is transferred from the seller to the buyer. Okay. Any recording fees, any processing fees, and this is for your loan, because why? There's a loan processor who is working really hard to make sure that your mortgage gets through. Okay. Underwriting fees, loan discount points. I have to change the paper. Okay. Prepaid interest on your mortgage loan, property taxes, any inspections. Okay, they want, so if there is, if you have mold or if there's settlement issues, if they have to get an inspector in there, boom, you got to pay for that. Some homeowners associations, if you're purchasing in a PUD or in a condominium association, they may require a transfer fee. Okay, so keep that in mind. And then the home inspector. That's going to usually, you want the home inspector before you even, that's at the very beginning of it, but you may also be tied into paying for that. So just be aware that those are the fees you're going to pay. And now the next question is, who pays the realtor? Well, the realtor is typically paid by the seller. Okay, this is clearly established in the agreement, in the signed agreement between the seller and the and their licensed broker who is advocating for them. Okay, so it's all clearly established. And then as well as the percentage of that fee. Okay, so it's typically anywhere from 5 to 6% total, with half of that amount going to the buyer's broker and half of it going to the seller's broker. Licensed real estate brokers or realtors don't get paid until the deal is closed. Okay, many of these, mortgage company doesn't get paid, bank doesn't get paid, no one gets paid. Or almost no one gets paid until it is done. Okay, sorry for going along. Lots of costs. I'd rather have you be surprised, and I didn't mean to have this one go so long. So you got 6.5 minutes of me. Have a great day, you guys. Later.